going to just introduce the 4 gentlemen who will be on the panel next. So we have Mario Chase, examiner from the Financial Services Commission. Mario Chase is an examiner at the Financial Services Commission of Barbados, and in this capacity, he assesses the financial viability and compliance of regulated entities to all applicable regulations, legislation, and guidelines. His particular focus is on corporate governance, anti-money laundering, operational credit, investment, and liquidity risks within the entities examined. We also have Nigel Romano, the CEO of JMMB Bank in Trinidad and Tobago. This is a position that he has held since March 2015. He has extensive global experience in public accounting and banking. He started his career with KPMG, then joined Citibank as CFO in Trinidad and Tobago. 6 years later, he joined Ernst & Young as tax and corporate finance partner. And fun fact that many of you may not know in this room, Nigel Romano is an ultra-marathon runner. And I've tried running with Nigel, but Nigel walks at the speed that I run at. So that relationship did not last very long. Guys, you all can come on stage. We then also have Darrell White, CEO of RBC Financial Caribbean. Darrell is a career banker with over 30 years experience spanning corporate and investment banking, commercial and retail banking. And Darrell's career at RBC began in May 2004 when he joined RBTT Merchant Bank Limited, now RBC Merchant Bank Caribbean Limited. There, he has held positions of regional manager, assistant vice president, and vice president distribution, and vice president capital markets and distribution. And last but not least, we have Marlon Yard, the managing director of the Barbados Stock Exchange and Barbados Central Securities Depository. Marlon has been with the Barbados Stock Exchange and its subsidiary, the Barbados Central Securities Depository, since November 1st, 2003. He currently holds the position of managing director of the Barbados Stock Exchange and the BCSDI, effective March 31st, 2016. Marlon has played a key role in many of the significant developments at the Barbados Stock Exchange over his 14-year tenure. These include, most recently, the Barbados Stock Exchange's demutualization in December of 2015 and the launch of international securities market in March of 2016. Ladies and gentlemen, please join me in welcoming these gentlemen to the panel. So, the way that this panel is going to proceed is that I am going to ask each one of these gentlemen, starting from my rightmost, your leftmost, Darrell, Marlon, Nigel, and Mario, each in turn will tell us how their organization is preparing for the digital age. So Darrell, I'll start with you. I think your mic is live. On.
Yes, good afternoon, everyone. Good to be here. And thanks for inviting me, Marla, and of course the BIT organization, and of course all the Barbados, of course, for hosting this event. At RBC, we looked at where banking was heading, and there were options that you could take in terms of how you position yourself. The reality of digitization is it's like a tidal wave. It's inevitable. It will happen. Whether or not you like it, whether or not you welcome it, it is the absolute reality. It's all around us right now. I tell people, put it in perspective. If you were to walk into a hotel or a resort with your kids and there was no internet connection, they would all leave immediately, or there'd probably be a riot. People panic now when they're out of contact and they're not connected. The reality as well is an evolving consumer base that wants everything immediately at fingertips, 24/7 access. So if you listen to the voice of the customer, it tells you, not in a whisper, but in a shout, that digitization is the way to go. Now, we saw different banking models evolving, and some of the banking models would have said, well, okay, and you do already have that. You already have banks that literally have no physical presence at all. In that instance, they are connected only to digital channels. They obviously is a low-cost type model. But at the same time, they would even, and what you find as well is that there are some aggregators that will simply just try to aggregate deposits or aggregate deposits wholesale and then do retailing type products as well. But they reach their clients largely without using physical means. And there are others who've sought to differentiate. And bear in mind that no matter if you choose to say I'm differentiating or I'm being a cost leader in the business, it's just really about how you engage the technology to help you become that. So I am one of those who believe that technology is absolutely an enabler. So you saw these two models evolving, and for us, and by the way, one of the things I would say about bankers, and I think about business as well, you need to have a healthy paranoia. And by a healthy paranoia, you have to be able to keep challenging yourself and think that things are going to change, and therefore I want to be the change. I prefer to disrupt myself than to be disrupted by a force that is unknown or indescribable, or of my imagination. So I prefer to stretch and disrupt ourselves. So we have set it out and we've said, well, we want to be a digitally enabled bank, but we want to be a digitally enabled bank that nonetheless values and treasures the relationship. And it's not that transactions, that we do not want people's transactions, but if we had to choose between transactions and relationships, you realize that if I have the relationship, the transactions will come and vice versa. So we set out on that part. The key things I would say, Marla, in terms of how we forged that path is, one, we declared it when we took that choice. We had to declare it, obviously, internally. We had to engage our people on the journey. Little things that you do at times. And by the way, by declaring it, that declarative intent to become a digital bank is something that in the Caribbean space doesn't always sit well with your consumer. Because immediately, of course, you have, and it's your typical bell curve. You have this element of your consumer base, or of your, should I say, customer base, that will be absolutely delighted with you and say, why did it take so long? Because this is what we're seeing in developed countries. And then you'll have the others that say, you're leaving me behind and I'm not traveling with you on this journey. And you would be surprised at the type of pushback that you get from customers and from the public at large when you're going along this journey. So sometimes you literally have to, not literally drag your clients kicking and screaming along the path, but you have to have such a dogged determination to getting there that you will implement these initiatives in any event. So to a certain extent, we in declaring we were going digital, we removed things that we saw were obstacles to digitization. They're physical. The physical space and the layout of when you walk into a physical space is one thing. The need for a physical space is another thing. So you have to redefine how you meet and greet and talk to your customers. Obviously, we invested heavily in digital platforms as well, our mobile banking app. And statistically, what we've seen is within, I would say, from a standing start, about a year and a half ago, we went from having, and if you look at a client base of, say, 800,000 active clients across the region, we probably, from a standing start, went to around 120,000 to 140,000 active digital users. Now, if you say that, and you say, well, of that 800,000, 900,000 clients, how many of them regularly interact with you?
Just using your mobile app, right?
That is,
yeah.
and what we found as well is that more people, when people start using the mobile app, they do not go back to the computers. Most people, when they start using the mobile app, and the other thing I will also say is that we also realize that your phone is actually in a lot of ways more secure than your computer. You have less of a threat in terms of using your phone, in terms of, and by the way, that's one of the big issues that people will always, red flags that people will raise. So I don't want to go too long on it, but simply to say, one, it was critical to engage our staff in it. And engaging staff actually meant telling staff, you cannot come to the counter and do a transaction as you could do on your phone. Yes. Because they were the ambassadors of the digital change.
Exactly.
I think that was important, obviously, working with our regulators as well as it was happening, because I can assure you the Financial Services Ombudsman got a lot of calls over those few weeks or months when we announced we were going digital. So getting the regulator into the conversation, and of course having that conversation with your consumer in terms of engaging them and showing them all the digital possibilities and the ease that goes with it. My final comment on the point is that a lot of people seem to think that going digital from a commercial banking perspective, because we are in an industry that is built on confidence. A lot of people seem to think that going digital meant excluding people. That's interesting, because a lot of the conversation this morning has been about financial inclusion. But a lot of people, especially people who have seen the bank as a repository or where they want to go and see this bricks and mortar space and do business and meet someone that they can have a chat with. People have tried to convince me that the elderly like to come to the bank because it's an outing, as we say in the Caribbean. It's an occasion, and they see their friends on that day that they collect their pension checks. And for the life of me, I struggle to understand why someone would jump in their car, take traffic, then walk to the bank, sometimes line up outside our premises from 6 o'clock in the morning to do something or to get access to something that can be sitting in an accessible form to them that they can use without ever having to come to the bank.
A lot of it is education. Sometimes they're not even fully aware of the service or how it works.
Yeah.
So that's a bridge as well that you have to cross.
Yeah.
So Marlon, you're going to tell us about how the stock exchange has been preparing for the digital age, right?
Yes, I am. First, let me thank BIT for the opportunity to be on this panel. In my conversation, I quickly want to cover 4 main points. What demutualization has done for us in being able to facilitate partnerships, particularly in the digital space. Collaboration in 2 areas. Collaboration with other stock exchanges in the region and how we've used technology to do that. Collaboration with our regulators enable us to fulfill our role as a self-regulatory organization. And then a very key point is that of product offerings and what our plans are and what we're working on to make the capital markets through the stock exchange a greater contributor to economic development in our region. So let me start with the demutualization. A few years ago, we made a decision that we're going to move from a member-owned company to a shareholder-owned company. And the main reason for that was, outside of the whole governance issues, was to be able to have a capital structure that would allow us flexibility. And why would we want that capital structure to allow flexibility? We realized at that time, and at about the same time, we had developed our international securities market. And we knew that for us to be truly successful, we needed to involve other players in the marketplace. And we needed a corporate structure that would facilitate that. And we did that. So it allowed us, and we've had benefit of that decision in that some of our shareholders would have opted out as shareholders because of conflict of interest issues, and others came in because they saw the stock exchange as an opportunity to leverage their products and services. And strangely enough, the company that did that is sitting in this room too as well. A company called PolyAbed, a partnership between Mr. Abed and Polymath out of Canada. They saw the opportunity and they took the opportunity. So we see that there's scope for us moving in a certain direction by that action. The other thing is collaboration. We work with the other stock exchanges, particularly Jamaica and Trinidad, in using the same trading platform across the region. We did that obviously for economies of scale. We have small markets. The costs involved in each of us having our own platform, could be prohibitive given the level and the size of the transactions. So we decided to work together in that space. Right? To take that step, a step further, is that we decided to use technology. So we're talking technology and digitization too at the same time, from my perspective. We use the cloud services to allow us to do that, and we partnered with Cable and Wireless to allow us to do that. So all of us house our trading platform in the cloud and obviously partition for each market. A lot of people don't know that, but we use technology to assist us in that particular direction. Now, why would we do that? Observe the cost, scalability. As each of our markets grow, we can get the technology or the capacity to grow in the direction that we want to go, without having the burden of having to buy hardware and preparing hardware, the space for the hardware, etc. Somebody else handling that for us. The other collaboration is from the regulatory perspective. We are a self-regulatory organization, and again, to allow us to regulate the market better and to work with our regulator, they have access to our trading platform from their offices. So again, technology has allowed us to do that, to better regulate the market, to engender confidence within the capital market. So that's another form of collaboration that we use technology to allow us to do. The other thing is that our issuers, if they so desire, they can have access to their part of the register to allow them to see who is buying and trading their securities. And then the final sector I want to talk about is product development. That is key. As I mentioned before, we see the exchange as crucial, or a key player in economic development within the region. It allows people, allows the savers to invest and the people who need capital to access that capital. Right. It allows people to create wealth for themselves by investing in a well-regulated market. So one of the initiatives is, for example, that we're working on is revitalizing and redeveloping our junior market, and we want to rebrand that. And there are certain things that we've seen in other markets that we want to bring to our market to allow that. The other area that we want to look at, that we worked on, is developing an international securities market. And that is to tap into what we have in Barbados in our international business and financial services sector. Obviously, there are changes that we are going through as a result of OECD requirements because of the EU, etc. But when those things are being worked on, and we want to be a true and viable partner in the international business and financial services sector. And then finally, digital sphere in securitized tokens. This is something that we are keen on. The Barbados Stock Exchange is part of a working group that has been working to develop a framework for the cryptocurrency space. We've determined, based on our legislative framework, that securities tokens are securities. And we want to attract listings in that area, and we've been approached on many occasions for that. And we're in the process now of working with a provider for trading of securitized tokens, so that we can be a platform and partner with them to do so. So these are the areas. Demutualization has allowed us to have a capital structure to involve partnerships with key players, collaboration with the other exchanges by the use of technology, collaboration with our regulators to help us better regulate the market, and also product development. You have to keep finding new ways to offer your services to the marketplace.
And of course, diversification is important now, right? And
yes.
Given what the Prime Minister said this morning, I would imagine that area of product development is going to flourish now.
Yes.
So congratulations on being progressive there.
Thank you.
Right, so now, Nigel, he'll tell us how JMMB has been preparing for the digital age, right?
Yes. So JMMB, to start with, is a very small bank. So we start with a handicap. And that handicap, because of our size, we have two things going against us. Size and age, actually. We are not very old, so we don't have a lot of cheap deposits sitting in banks, not doing much. And we are not very big, so we don't have the economies of scale necessary to compete with the RBCs and the republics and the first citizens of the world. So we have to be very nimble. And in that regard, two things. One, working with technology companies and software as a service has been a big help. So we go out there and not invest in the software, we rent the software and we pay as we use it. And that's helping. But the other thing we are doing is looking for partners in the fintech space, partners that would help us to connect with customers without having to go through that whole development cycle. So the fintech guys are very, very smart, they're very bright, they're very nimble. And we understand regulation and we understand banking. So the idea is to marry the two. And we have a license, of course. And we are very cognizant of the responsibility that comes with that license. The point, though, is that the typical client is afraid of the bank. We went out and spent, Prime Minister Motley referred to the guy selling coconut water. I went and sat with a lady who had a fruit stand. We actually buy fruit from her. And I asked her, so how do you bank? And she said, well, Republic Bank is down the road, so I go there and I have somebody take the cash and deposit it. She never goes into the bank. She has never borrowed money from the bank. She has educated 3 children, 3 of them internationally, without taking a cent from the bank. And she's at risk. She's at risk every day because the cash is there, and she can be. So for me, what we are talking about here is a real opportunity to bring people like that, the small, the micro entrepreneurs, into the ecosystem. The individuals who have, so think about it. She has to, if she didn't have a friend to deposit the money, she would have to leave her store to go to the bank to deposit the money and wait in those long lines. And her business would suffer. So it's thinking about how we solve for that problem. And the fintech, the mobile money, the distributed ledger technology is certainly helping. And the other piece that is very promising is the whole question of the AML KYC stuff, the biometrics, the facial recognition, the artificial intelligence is all coming together, as Jack said. The future looks a lot brighter today than it did 2 years ago. And for me, the ability to set up maybe a utility that captures all that AML, KYC stuff using blockchain technology or distributed ledger technology and helping and have us access it when we need it helps the little banks like me and allows us to compete more vigorously. Exactly. So those are some of the areas that we are looking at.
Thank you. Thanks, Nigel. So, Mario, so tell us what the Financial Services Commission is doing in this space.
Okay, well, the topic is how the organization preparing for digital age.
Yes.
I disagree. I believe that the topic should be how we are maximizing and harnessing the digital age, the benefit of the digital age, because the digital age has started and has been here for quite some time. It's not something that happened just yesterday, right? Because I believe most forward-thinking companies have already developed or started implementing various plans for this space. The FSC has 2 different, I would say, streams for both our internal and external stakeholders. Internally, we are at the execution stage. We are digitizing our processes and our regulatory and reporting processes. We have seen some benefits so far in that we have started refining our current processes, seeing what is maybe out of date and what can be improved. The effective review of information, basically something that would take 3 or 4 people to do. We can do it in 2 steps instead of 3 and 4 steps. 10 reviews and instantaneous analysis and detection activities. Our basic end result is that we will be more proactive and predictive versus backward-looking when we come to monitoring the financial institutions, risk, and compliance. Well, after everything is fully implemented, I say that we've got 3 main benefits that we're looking at. One is enhanced effectiveness, which is basically, as I said before, improving our traditional processes, which will give us faster supervisory action so that the public won't say that FSC is taking too long with their registration and different problems, right? And it improves our off-site monitoring and early detection of potential risk. Reducing costs, I believe that anything to do with reducing costs is something that anybody will get behind with technology, right? We're trying to automate processes so that it won't involve so many people. I remember I had read that there was a regulatory agency that actually reduced their costs by 80% when they implemented a AML solution. And also we want to increase our capability right now, basically to make possible the humanly impossible. Because when you're looking at all the different regulatory filings or financial data. We're only human. So if you had a system in place now that can pick up patterns that we cannot, it'd be better for us to also serve the public better. An actual example of what we're doing right now, we have an AML committee, and we're looking at IT solutions now for the collection, storage, and collation of data, so we can identify risk based on geographic location, entities, procedure services, customers that you use. Now, that's for internally. Externally now, I would like to say that the FSC, because I heard a little hate from regulators earlier about just a little bit. The FSC welcomes everyone who is maximizing the fintech space and the technological platform. We welcome you, right? We recognize that fintech has given rise to innovations that can improve the quality of service to customers and also improve risk practices once done right. But we are aware of the importance of innovation, but also balance it with our regulatory oversight, our regulatory mandate of protecting consumer for financial stability and consumer protection. Okay? So that's why we are in the process of developing a regulatory framework with that in mind, because we don't want to stifle innovation, but also have to protect our consumers. This regulatory framework will apply to everyone who we regulate. Okay? We like to state that we focus on the financial activities of a firm and not the technological activities. But on the same vein, you have to appreciate that if you don't understand the technology that you have or you're right, it can open you to operational risk. This is something that we have to also look at. So if you have a technology right now that we don't understand or that we believe heightens consumer protection risk, we will be looking to probably place you in a regulatory sandbox. These are forward thinking plans. Not nothing, right?
Music to my ears.
Forward thinking once you're regulated under us.
Right.
The regulatory sandbox will be a place for you to be able to test your technologies in a safe space, basically, and we are able to learn more about your business. We would most likely ask you to put in place certain guidelines towards your testing for the protection of the consumers at the end of the day.
Right.
There's not a space for you to actually play you getting away from regulatory or legislation oversight.
Right.
If after any regulatory sandbox, then we'll decide, well, how we are going to deal with it once we have a better understanding and you actually test your product to see how it fits into our space. For the companies now who would like to be regulated and we don't regulate, right? I know the FSC is currently in talks with the IBU Central Bank on seeing some way that we can accommodate that, but that's something in the works and nothing I can really speak on at this time. What the FSC doing? The FSC has the FinTech Committee, of which I'm one. We deal with all FinTech matters in the FSC.
Yeah.
We're also looking to continue educating the staff because, as you know, FinTech is an evolving space, so what is good tomorrow, what is good today will not be good tomorrow. So you always have to be updating your education. You also belong to a few working groups. You know, we spectate in the local working group. I say the word spectate because you cannot make policy without buy-in from your stakeholders. So we spectate, see what they're doing, what their views on, so that it will inform us when we are actually making a decision. We belong to the International Working Group, IOSCO. IOSCO, as you know, the best practice, the gold standard security regulators in the world, right? So we belong to that. And we also belong to a regional working group with different regulators, basically saying how because we understand the new space, we don't want to, no one has a monopoly on it. And one of the working group also are to say, because standard is a very harsh word, but standardize guidelines so that what we're doing here, we're doing somewhere else because it is a business as well, because when someone goes to a different jurisdiction, they don't have to start fresh on what the jurisdiction may need.
Right.
And that's basically what we're doing for now.
Thank you. So, thanks, gentlemen. So mindful that we are about 35 minutes behind time and we're the only things sitting between you and your lunch. I want to open up now to Q&A, but we won't go for the length of time that we had originally planned on the agenda for the question and answer session. If anybody has a question, we have roving mics in the room. I would suggest you put your hand up, and the mic will come to you by magic. And then you can tell us your name and the organization you represent and tell us what your question or comment is. Please keep it brief. Thank you. Any takers? One there.
Hi, I'm Afia Luis from IBIS Management. I have specifically a question for the commercial banks. What would it mean, because I didn't hear, we talked today about digital currency from the BIT perspective, from bank perspective. What would it mean for you to be able to allow your clients to transfer money from bank account to the wallet, to the BIT wallet, e-wallet? What would that mean for you as a bank, and why it didn't happen yet? Or are there developments in that area?
That's a great question. Thank you. Who
Yeah,
wants
I can
to
start
take that
with
one first?
I'm sure Nigel will ably assist. But I can start by saying, we are looking at fintechs at enterprise level. RBC is either partnering or invested in fintechs. We have a sandbox where we're playing the game. We have different views on how it will evolve in time. Before that happens, I think first things are driven by the clients and requests of clients to make things happen, because we are still very much client-centric organizations. And then additionally, there's the reality of regulations and where regulations are involved. So a nice video there where someone was saying that what you need to have to open a bank account. We are a heavily regulated industry, probably for some of our own misdeeds in the past, but we are a heavily regulated industry. So it's, I don't think it's far away. And what I think will happen, we can guess in how many ways this thing will evolve. Do you create this space or one particular ledger that will manage the fintech transactions? Or is it something that will attach to each particular account before it then comes into a single ledger within the banking system? How does that ledger now interface with the wider system and the like? There's work to do there. I'm not aware of where it's happening right now. Certainly, I know at our enterprise level in Canada, where we may be playing one or two sandboxes, it's not coming to the full ecosystem just yet. But I think it will be driven both by regulation, by client demand, and certainly by the technological adaptation that has to take place for it to happen.
Thank you, Darryl.
Why it hasn't happened yet, I think we're just too slow.
We meaning the banks?
Well,
Or the
yeah,
regulators?
both.
Yeah.
But the point is that what is happening in India and China, I mean, it's amazing. It's as Darryl said, it's close, and it's going to transform incredibly. So, I am looking forward to it, quite frankly. So.
Great, thank you. Anybody else? There's one hand up.
Hello, I have a big voice.
Okay, you go for it.
Patrick, if you could take one piece of government regulation and throw it out the window so you weren't completely ball and chain by it, what would you tell your government to get rid of?
And this is a question for everybody on the panel, or did you want specific people to respond? Everybody. Well, the regulator wouldn't respond, but.
Instead of throwing out, what I would like to see is that one digital ID, because that will simplify so many things.
That's true.
Especially in the account opening. Yeah. So the faster we could get there, for me, that would make a huge difference.
Yeah, agreed.
That one digital ID.
That's a good question.
Sure, you're politically correct.
Yeah, well, it has to be politically correct. Still have to do business in the region.
Yeah.
But regulations, what I would say is that regulations are built for things that have happened in the past, and quite often they are not forward-looking. Quite often my conversation with regulators is I believe that a regulator, and obviously I know there are a number of regulators in the audience. I'm waving at my Trinidad regulator right now, who happens to also be my Caribbean regulator. But regulators, I always say, they need to be, they can't be a traffic light stops you. It doesn't, quite often traffic lights don't help the flow of traffic, because what it does is stop one for the other to proceed. True regulation, and it will actually be seamless, and everything will be coordinated. Unfortunately, we do not have the data flow, the data integrity, the data connectivity to trust what would happen without putting all these stoplights in place. When we do that, and when we do have that connectivity, then I believe regulators will be able to some degree to say, let things flow more smoothly.
If I could jump in too as well.
As a self-regulatory organization, I think that what we need to do, I mean, from a securities perspective, there are three main things the securities regulated does. They want to make sure that they're protecting the investor, that the market is fair, is transparent, and everybody knows what's going on, and basically the reduction of systemic risk in the system.
Right.
That being said, we also need an environment where there's facilitation as well, to allow, because regulators are always catching up with innovation. So the regulatory sandbox idea, or the regulatory sandbox reality, is something that we need to look at. But also, what is very important is that we need to utilize technology to its fullest to make things more timely in decision-making process. So one of the things, what we should do is try to use as much portals to file documentation, artificial intelligence to scan information to see where the trends are and where there's correlation or disconnect between what should be there or not there, and let our people focus more. Let the technology do the hard work, and let the people in the regulatory framework do more high-value work, analyzing the data so as to allow things to be done a lot more expeditiously.
Okay, thank you. Ladies and gentlemen, join me in thanking the panel.